of them, I should say. And tonight we are here. We have Tamara Caldwell Burns from the county. She's here with us. And we've got faces from all of our, I believe, all of our career or job placement agencies. Is that the right terminology? And so I'm grateful that you guys are here. And we have some parents in the room as well. And I'm not sure if we have anybody online yet, but thank you guys for being here. Tonight, we are going to hear from Adelaide Winters from Cordell Neer and Company, and she's going to share with us about disability trusts and ABLE savings accounts. And we have microphones for y'all on the tables. If you want to speak and ask a question, you need to push the button on the mic. Make sure the little light turns green and ask your question, and then push the button again so that it goes red again, so that if whatever you have, any conversations you have at your table won't be heard online. Also, we have bathrooms out the door to the right and then left if anybody needs to use the restrooms tonight. And if you have questions, just put your hand up and Adelaide will call on you and we'll make sure you get your questions answered. And if there's anybody online, I will check the chat room and make sure questions from the chat are presented as well. So thank you very much.
All right, well, the microphone and the visual of myself is going to make me nervous, but nice to see you all this evening. I had intended to have one of my colleagues with me, Steve Neer, who has several children with developmental disabilities, and he personally uses these ABLE accounts. So he was going to be my super expert, but I'm going to explain to you tonight what these ABLE accounts are and hopefully give you a good sort of baseline understanding. And I welcome any questions that might come up. Many people have heard of ABLE accounts, but don't really know what they are necessarily. So we're gonna just hop into it. Will I get to see the slides? Perfect. So first, I'll tell you a little bit about why I'm here. So I'm a full-time financial advisor. I work with Cordell Neer and Company and CNC Financial Group. I do investment planning and retirement planning for individuals and families, mostly in the Valley. We offer a number of services at our firm. Is this going to work? Let's see. There's me. There's Steve, who's supposed to be here, but you just have me. So at our firm, because we are both a tax planning firm and a financial advising firm, we offer some pretty holistic advice to families. So we firmly believe and know that any financial decision that we make has a tax impact and vice versa. So we aim to help people limit their taxation, and there are some special tools we can use to do that. So that's who Cordell Neer and Company is. A list of our services, often we're working with businesses, or some of you may work for an entity where we help with your retirement plan. We do individual planning as well. We'll get into that. So tonight we're talking about the ABLE accounts. I'm going to tell you what they are and how they function, the tax treatment of them and the limitations of them, and just sort of generally why families choose to use these kinds of accounts. I don't expect that anyone's going to walk away tonight. I understand a lot of you are providers that work with these families, and so I don't expect that you're going to walk away and be able to explain an ABLE account to them. But if you could take away just the fact that they exist and that they can be really tax efficient, and maybe make a referral back to our firm or another professional that works with these accounts, that can be really powerful in a family's life. So what is an ABLE account? So it stands for, I don't even remember, but basically they are accounts that are designed to be tax efficient, to support daily living for these affected individuals. So they're modeled after a 529 savings plan. Many people have heard of 529 savings accounts for education. You put money in, it grows if you invest it properly over a period of time, and then you can withdraw those funds tax-free if you use them for the right thing. So in a 529 education account, you use it for qualified educational expenses. In an ABLE account, you use it for qualified expenses, and I'll show you a whole list of them, but qualified disability expenses. So functionally, let's say you put $10,000 into this account and it grows to $100,000, you have $90,000 worth of growth in that account, right? Under any normal circumstance, you'd pay income tax on that $90,000 of growth. If you do it inside of an ABLE account and you use it for the right kinds of expenses, that $90,000 comes out tax-free. So that is the purpose of these. The other purpose of them is to allow for expenses to be paid and essentially income to flow through these accounts, and yet protect the Social Security income and Medicaid benefits that the individual is counting on. Any questions so far? So there are some requirements that are changing. So currently, in order to have an ABLE account, you must have a qualifying diagnosis, and that must occur prior to age 26. So I understand with families who are affected in this area, getting that diagnosis is like your number one. All of these, your access point to all of these services. Certainly the case with these ABLE accounts. Beginning next year, and I don't know if it's January 1st or December 31st of next year, they're extending that to age 46. So there will be a huge gap in time. So we'll have a lot more time to work with starting next year. The account is actually owned by the individual. So let's say it's a child. I'm going to refer to these as your child's account because that's easiest. So your child is actually the account owner. They're the named beneficiary and the named owner of the account. Whether or not they are able to actually manage those funds themselves, or if they have a guardian or someone who is assigned to manage those funds for them, that is certainly an option. So you name that individual, and then maybe it's a parent or guardian or power of attorney. Somebody else can help to manage the funds and the expenses for which those funds are used. How do you fund an ABLE account? So anyone can fund it. Money can come from a trust. I know a lot of families have a special needs trust. The trust can filter money into an ABLE account. So in a perfect world, you'd have a special needs trust that's been funded and you have an ABLE account and you can flow money between the two accounts. The ABLE account can then pay for things like rent and that sort of thing, okay? Family, friends, grandparents, same sort of thing with college savings accounts, right? I have 3 kids and I beg the grandparents to not buy any more toys and please just put money in their 529 plan. You can do the same with these ABLE accounts, right? There are annual gifting limitations, so that number changes year to year, most years. Currently, for 2025, that annual limit is $19,000. It's not $19,000 per person that's giving, it's $19,000 into the account. So each year it can be funded with $19,000. Perhaps next year it's $19,500. So you do have to sort of manage the inflow. If you overfund it, then it does trigger some tax. So we do want to be careful with that piece. In addition to the annual gifting limit, the contribution limit of $19,000, if the child, let's say, is employed and has income coming in, they can contribute all of those earnings into an ABLE account as well. So that is in addition, at least up to 14,580. And again, that number fluctuates year to year. Any questions on any of that so far? So what are qualified disability expenses? Education counts for this. I mentioned housing and rent. I think that is most typically what we're seeing people use this for. They can use it for any kind of transportation expense. You can use it for any kind of assistive technology, any healthcare, any kind of service expenses, attorney's fees. I can't think of anything, I guess financial management fees. And then if there's a balance, and the individual passes, then that can be used to cover any end of life expenses as well. There's not any kind of requirement as you're using the funds, like to document what they were used for. But if you were ever audited by the IRS, they are going to want you to furnish receipts for those expenses. So it's a good idea to maintain them, but you don't have to like include them in your tax return every year. Questions? So I mentioned that the earnings in this account grow tax-free. That's really the primary benefit to this, in addition to preserving your Medicaid and SSI benefits. The thing that sometimes catches people is they think, oh, it's a tax efficient account, I'm going to get some kind of tax benefit for my contribution. No. So if you put $19,000 or grandma puts $19,000 in, she doesn't get a tax deduction for those contributions. It's a gift. One little limitation, not little, large limitation. The able balances cannot exceed $100,000 and still maintain those Medicaid and SSI benefits. So if the balance were to grow to 110,000, let's say, it can disqualify that individual from their benefits. So functionally, you want to manage your account pretty carefully. I would say funding it up to a certain point with some growth expectation, and then utilizing it for those qualified disability expenses so that you're kind of always keeping it under that threshold. Strategies, I mentioned this also. So pairing this with a special needs trust is probably pretty powerful for families that do have some wealth or have been gifted some wealth or inherited some wealth. Funding of a special needs trust is probably number one, and then an ABLE account would be number two. That's not a blanket statement, but more than likely, if there's some wealth to be handled, that would be the order of operations. And then, like I mentioned, we're using those ABLE accounts for everyday expenses. So you really want to, I kind of think of it as like a checking account for that individual's expenses. So long as it qualifies under, it wouldn't be for spending money or grocery money, but pretty much everything else can qualify. So the money can flow in and out of that ABLE account. Again, we're encouraging family contributions. Any amount that can get in there for any reason would be helpful. And then, using it for your rent or mortgage without affecting your Social Security income is, that's a differentiator from the special needs trust. So if too much comes out of your special needs trust toward rent or mortgage, that can disqualify you from your SSI benefit. There was some legislation a few years back that allows automatic payroll deductions. I mentioned that the account can be funded with up to $19,000 of a gift and up to $14,000 and change from payroll. So you could set it up for that individual to contribute, let's say, $1,000 a month from their paycheck directly into the account. How do you start an ABLE account? If you're working with a financial professional already, they likely have access to these accounts and can assist you with that. We do that in our office. I would recommend that you peruse your options on this ablenrc.org website. You can also Google Washington State ABLE. There's a lot of options online, at least to research your account options. You're going to want to compare fees and services and that sort of thing. Really, they're all going to be about the same. Functionally, it's an investment account, right? So if you're contributing to a 401k or an IRA or something like that, they operate very similarly. Money goes into the account. It's up to you to actually invest it for some growth and choosing some investment options that are going to meet your desires and your goals. That's the part you might want to work with a professional on if that's not an area of expertise for you. One ABLE account per individual. So I don't think this is typically a problem, but if a child, let's say, if grandma opened an ABLE account for the child, the other grandma can't also open an account in their name. It's one account per child. Generally, like I mentioned, the account owner and the beneficiary are the same. You can, so family planning, let's say you had two children with disabilities, and they both have ABLE accounts and one passes, you can designate the other child as the beneficiary of any remaining funds so they can go back and forth. Yes. Yeah, so the question is, if you have a college savings account, can you move the money in from a college savings, like a 529 plan, into an ABLE account? I believe yes is the answer, and that should be tax-free if it's done as a rollover. So you'd want to make sure that you're doing the correct paperwork. But yes, that should be the case. I'm not certain of that. But only up to that annual gift amount of 19,000 for this year. But you could do it over several years, I'm sure. I'm happy to follow up with an exact answer on that, but I am 99% sure that's an option. Um, and then just like any other account, like a 401k, those are contributed to via monthly or weekly or biweekly contributions from your paycheck. These accounts, you can set them up in the same way so that you've got $100 a month going in or something like that. Sometimes it's a birthday gift. So $1,000 goes in on a birthday, and then we're going to keep doing $100 a month or whatever the case may be. And that is the bulk of the presentation. I would just say that in addition to the structure of these accounts, having the account itself is step one. That's setting you up for that tax-free benefit out of it. But working with someone to get some good investment advice so that you're getting the max, if it's going to grow tax-free, you want to maximize your growth, right? Working with somebody to understand what those options are and what the impacts of them are and the costs of them are. There's costs associated with investing, and there is risk associated with investing. So you want to make sure that you understand the balance of those two things. But from there, getting as much money into these accounts as you can to aim to get it toward that $100,000 mark can be a huge benefit. No, go ahead. I haven't heard of the disability trust other than I am familiar with special needs trusts. Yeah, so they're independent of one another and the tax treatment is very different. And the impact to benefits is different. So that's the difference between a special needs trust and an ABLE account. So the ABLE account, you can use it for all of these qualified expenses, and they come out tax-free versus a special needs trust. If you have too much income from one of those, you can trigger some of your benefit to get turned off.
Also, take out things for the very picky of what you get money out for.
Yes.
There's a lot of things, there's a lot of things on the trust you can't take money out for.
Now, a trust can be funded with, I believe, essentially an unlimited amount of money. So if there is a really large inheritance or something, or sometimes families are wealthy, right, and they have a large estate of their own, they can sort of divest of. I'm working with a family right now who has a large estate, and they have an adult child that is dependent and going to need income for the rest of his life. And so a planning strategy for that family is to divest of their own estate. They're going to be okay, and set up a special needs trust and enable account for their son so that they can begin this process of covering his annual expenses through these two tools. And it has a really powerful impact to that family as well by divesting of their own estate. Some careful planning that happens in those cases. And unfortunately, not everybody's super wealthy, so we don't all get to participate in those benefits. But there are some pretty strategic things you can do with those special needs trusts.
Not spend money on from a trust, or what the difference is. Sorry,
Yeah, no, that wasn't the topic I was given, so I didn't study. I do know this. So for example, I know that the special needs trust can like purchase a home and own that asset inside of the trust, right? But then you can have the ABLE account on the side that's actually paying all the expenses, the taxes and the mortgage and the, water bill and all of that. Sorry, go ahead.
Well, and then, so it can own like the home, but you can't just use it to pay rent every month. So it's kind of picky on some of the weird things. And then sometimes on the trust, like it can be used for fun things, but it can't be used for other things. Cause I do the residential side of an agency too.
Okay.
So we do like dispenses from ABLE accounts, but we also do it for special need trust. So, it's kind of wonky on that aspect too. So, like I said, it's just wonky on the ways, and there's different special needs trusts too. So it depends on which special needs trust you can sign up for. So, yeah.
This is where the line between CPA, financial advisor,
Yeah.
and attorney goes straight to the attorney.
Yeah,
Right?
no, but what I'm saying is, so that's why I was just saying, it's just one of those things you have to look and see what works best for the person, that it's best to go to a financial advisor, because there are certain things that you can't do. So if they are looking for bills and all that kind of stuff, sometimes an able account is best, because you can use it for a lot more things, and unless you're getting audited, you don't have to provide the receipts and stuff, versus a special needs trust, you actually have to send the receipts first, and then you get reimbursed from
the
that trust.
Yeah.
So you have to pay for it up front, and then you get reimbursed from it, versus vice versa on the able account. You can actually get the money up front sometimes and then be able to pay for it backwards.
Thank you. Anything else? Sorry, that wasn't a very riveting presentation, but if you have questions, or if there's anything that we can help with, or be happy to look at the tax law and the special treatment of some of these things on a case-by-case basis, we're happy to do that anytime. Steve, my colleague who was supposed to be here tonight, this is a near and dear topic to his heart, and he's a real expert in this area. I'm more of the financial planning and investment advice expert. So as a team, we would be more than happy to help any families that you work with, or any of you individually, if you have further questions. I brought some copies of this presentation. I'll leave them in the back if anybody wants to pick one up that's got our contact information on it. Thank you. Yes.
All right, and I do know that we have a couple of families here. And so all of you guys as family members, all of the people around you tonight are service providers in our area that provide community inclusion, community exploration, individual services. And if you have questions about those types of things, all of these folks are here and are able to answer your questions, and they're from different agencies. So you might just take a look around and strike up some conversations tonight. All right, thank you guys so much for being here.
So we're ready. Getting